Welcome. Accounting and Management Made Simple is your channel of choice where we break down complex and difficult accounting and management principles into simple, understandable concepts. Whether you are a student preparing yourself for exams or a professional looking to apply knowledge practically, this channel helps you to grasp and understand complex key topics with ease. Please subscribe, share, like, and comment. Thank you. Hello students. Today I want us to break it down again. I want us to break it down again. I want us to do a bank reconciliation statement. I want us to do a solve a past paper of May 2021, question 1B. May 2021. This is CPA 1, financial statement, financial accounting, May 2021, question 1B. May 2021, question 1B. May 2021, question 1B. May 2021, question 1B. Now we are told in the books of Line Enterprises, the balance at the bank as at 30th of October 2020, according to cashbook, was 894,680. Cashbook balance was 894,680. That was the cashbook balance. Then you are told subsequently the following discoveries were made. Check number one. Always as you solve past papers, before you even start solving, you need to always ask yourself, what am I required to do? In this particular question, number one, you are required to have an updated cash book, and number two, you are supposed to have a bank reconciliation statement. If we even just go straight and you say updated cash book, we say Line Enterprises, updated cash book. Updated cash book as at 30th of October. As at 30th of October 2020. Updated cash book is at 30th of October 2020. You are told, so we are told that the opening balance is a debit balance. The opening balance is a debit balance of 894,680. We've said always be very careful on that information. At times you can be told it was a credit balance. If it's a credit balance, bring it to the credit side. If it's a debit balance, you bring it to the debit side. So when you're not told, you assume there was money in the bank and therefore you bring it down on the debit side. So we are told on additional information number one, check number 176,270, dated 3rd of October for 310,840. The check number is 310,840. In favor of Love Limited, had been collected recorded in the cash book as 301,840. 301,840. So we understated. It was for 310, but we recorded it as 301,840. It was recorded in the cash book as 301,840. And therefore, we need to get, we only deducted 301,840 instead of deducting 310,840. So 310,840. So 310,840 minus 301,840. 301,840 is 9,000. It's 9,000. We recorded it. We deducted 301,840 instead of deducting 310, and therefore we continue deducting because there was an error. We deducted less, so we now deduct further. We deducted 301 instead of 310, so we increase the deduction by crediting our cash book with 9,000. Number two, we are told bank commission charged 169,560 and bank interest of 109,100 had been entered in the bank statement in the bank statement on 23rd of October 2020, but nothing included in the cash book. So we update the cash book. It is in the bank statement, but it is not recorded in the cash book. So we recorded in the in the cash book by saying bank commission. We say bank commission. Bank commission. We are told amounted to 169,560, 169,560. And then we have bank charges, 109,100. Bank charges, 109,100. Bank charges was 109,100. Then we told number 3, the bank statement showed a check of 29,310 received by Andrew Olo and credited in the bank statement on 9th of October 2020 in our and credited in the bank statement on 9th of October 2020 was dishonored on 26th. The month in which they credited it is the month it was dishonored, on 26th of October 2020. No entry had been made in the cash book. We as the firm, recorded that we have received this money amounting to 29,310, but when it went to the bank finally reversed their credit. The bank reversed their credit because of a reason. Maybe there was no money enough to pay our check. And therefore, because when we had increased our money by debiting the bank, now we need to reduce our money by crediting the bank, and we say dishonor the check. Dishonor the check. We had increased our money with the check, now we reduce it with the dishonored check. We don't dishonored of 29,310. 29,310. We know that we're supposed to credit bank to record a reduction of the money, and then we reinstate the debt. The debt we have recorded as corrected, we now reinstate it instead of because we had credited the debtors account, 3 debtors, now we debit the 3 debtors to reinstate the debt. Number 4, check number 177, 145 for 15,100 had been recorded twice as credit. We were making payments, but we credited it twice. We recorded, in other words, instead of crediting 15,100, we recorded 15,100 twice. We reduced our money twice. And because we reduced our money twice, we now reinstate our money, 15,100, and this is error. 15,100, we are reinstating money which we had over deducted. Number 5, cash received in the last few days of October 2020 amounting to 1895,000 was deposited in the bank on that. We took the money on that 1st of October 2020. This amount was recorded in the cash book, but was updated in the bank statement on 2nd of November. It was updated in the bank statement the following month. But we are doing the bank reconciliation as at the end of October. And therefore, this is a reconciling item. We as the business line enterprises, we have collected and recorded as money collected. We cannot reverse it. It is collected and recorded. But the firm has not recorded. But we know they will record later. And we are told they recorded the following month. Therefore, it becomes a reconciling item. Number six. The customer paid directly into the bank account an amount totaling to 210,100 on 25th of October 2020. This amount had not been recorded in the cash book. In other words, the bank has increased our money with this amount of money, but because the customer didn't tell us, we have not recorded as an increase in our money. So we now record an increase of our money amounting to 100. These are direct deposits. These are direct what?
Deposits.
These are direct deposits. Our customer decided to go to the bank. They deposited it, but before they informed us that they have deposited the money, the account, the month had been closed, and it was a reconciling item because we never had information to that effect. So we update our cash book. 210,100. Now, checks paid by Line Enterprises during October 2020 amounting to 398,500 were not presented to the bank until November 2020. So we paid the checks, and in the cash book, we reduced our cash balance with an amount of 395,800. But the bank did not receive the checks, and therefore they had not reduced our money with this amount. And therefore that is a reconciling item, because it was correctly recorded in our books. It was correctly recorded in our what? In our books. But the bank has not updated because they have not been given the checks to pay. They have not been given the checks. So that becomes a reconciling item. That becomes a reconciling item. Number 8, a standing order payment of 15,000 had not been recorded in the cash book. So whatever has been paid by the bank correctly and it's not recorded in the cash book, we record it. So we come here and we say standing order 15,000. Now that helps us to make our updated cash book. So if we now add 894,680 plus 15,100 plus 210,100, we get 1 million. We get 1,119,880. We get 1,119,880. So we subtract the payments. Subtract 9,000. Subtract 169,560 minus 109,100 minus 29,310 minus 15,000, we get 787,910. We get a balance carried down 787,910. We get a balance carried down of 787,910. Please mark this. When we're preparing the bank reconciliation statement, we start with the new balance. We start with the adjusted cash book balance. Many students will go to prepare the bank reconciliation statement with the beginning cash book balance. No. We use the closing bank balance as per cash book. And therefore, we can say now, we can actually, let's use this side and say Line Enterprises bank reconciliation statement as at 30th of October 2020, we say balance as per adjusted cash book. Balance as per adjusted cash book, 787,910. 787,910. That is the balance we are reconciling. We have resolved all the other coins of the differences because we have adjusted the cash book balance, and this is the accurate balance to be shown in the balance sheet. That's the accurate balance to be shown in the balance sheet. But we are now doing a reconciliation between the cash book and the bank reconciliation statement. And therefore, in this statement, we always say, assume that what we did, we never did. Well, assume what we did correctly, we never did. And the errors made by the bank, we also made in them. Assume, those are the two arguments. Assume what we did, we reverse it. And the errors made by the bank, we also make the same errors. So if the bank increased our money, we increase our money. If the bank reduced our money, we reduce our money. Will we have the same balance if we did that? Those are the simple questions you must never forget yourself, to ask yourself. We are having the difference because there are some unpresented checks that we paid, and there are some uncredited deposits that we recorded, which the bank has not recorded. Or there are some errors that the bank has done. So if we say, if we made the same errors like the bank, and we reverse whatever we have done, whatever you have done and the bank has not done, would we get the same results? So we act as though we are reversing. We act as though we are doing what? Yes. We are reversing. Whatever we did and the bank has not done, and we did it correctly, we act as though we are reversing. There are some unpresented checks which reduce our money, so we add back. So we say, add back unpresented checks. Add back checks which we did, we prepared, and we reduced our money with, but the bank did not deduct. Bank did not deduct. And we are saying checks paid to by Lime Enterprises during October 2020 amounting to $395,800. $395,800 were not presented at the bank. They were not presented at what? So because we had deducted, we now added them. Because we had deducted, we now do what? Add them. Now, uncredited, for this one, we don't have errors. But we are saying, whatever errors the bank has done, if we make the same error, we capture it in the adjustment, we should be able to get the same balance with the bank. So this one, if we deduct these ones, we say, if we add them, 787,900 plus 395,800, we get 11,83,700. There was no errors by the bank. Now, because we added and the bank had not added, now we subtract the deposit. Less uncredited deposits. Less uncredited deposits. And the question tells you, additional information number 5, cash received in the last few days of October 2020 amounting to $1,895,000 was deposited in the bank on 31st of October 2020. This amount was recorded in the cash book, but was updated in the bank statement on 2nd of November 2020. So the bank did not update until the following month. So we now, because we had added, we subtract. We subtract 1895. 1895,000, and therefore 11,83,700 minus 95,000, we get 7 minus 711,300. We get minus 711,300. This is less than this, and therefore we are saying this should be balance as per the bank statement. Please, never forget the two methods and the arguments. Students try to memorize this, and the reason they fail is because they want to memorize. Don't memorize. Don't cram. We are saying, what is the reasoning behind the bank statement? This is the reasoning. You get the balance by the adjusted cash book, and then you ask yourself, if what we did and the bank never did, we reversed it in the reconciliation. We paid some checks, the bank never paid. We deposited some money, the bank never updated the deposit. If the things we did and the bank did not do, and we are able to see them, if we reverse them, will we arrive at the same fate as the bank? Will we arrive at the same fate balance at the bank? Now, when we say this, you ask ourselves, if even the errors that the bank made, if we made the same errors. Meaning, if the bank increased, we increase our money. If the bank reduced, we reduce our money. You will be able to check whether they agree. If they don't agree, if this is not the bank statement balance, and this in the cash book balance, it means there's a problem. There's a problem, and you now investigate to know what is the cause of the problem. That's the way to prepare the bank reconciliation statement. That's the way to prepare a bank reconciliation statement. Once again, ensure that you subscribe, like, and share our videos. Thank you very much.